Welcome to Commerce GYAN. Now, this is the latest trending news that we have all followed in the newspaper. That newspapers, in fact, on media, on YouTube, everywhere you will find the news saying where Rahul Gandhi has actually put up allegations that the stock market crash on 4th of June was basically a scam and that there should be a joint parliamentary committee JPC probe into this matter. So he has basically he has raised three questions. One is, why did the Prime Minister and the Home Minister comment on the investment strategy that the investors need to make? Second question that he has raised is basically connected to why were the media houses, which were actually under a SEBI scanner, hosting these kind of news on their front page. So he meant to state the news which was connected to Times of India. So Times of India, Economic Times had actually featured this. So actually, yes, if you go and check on the internet, you will also get this news where it is stated that yes, SEBI has lapsed a fine of 36 crore on Times of India owner Samir Jain, his wife and his daughter. They are barred, they are not allowed to actually trade in the stock exchange. So this was not actually published anywhere in the media. So it was not hyped much. So we are not aware of this news. But yes, there is something like this which has happened. And also that there was doubt raised about some shell companies that this particular group had. And on this, in fact, BJP leader Subramanian Swamy has also filed some complaints to SEBI. That is what the news article is stating. Another question that he has raised is basically in connection with the exit polls. That means these exit polls, which were quite hyped because it was showing something else than what actually happened. So there was a huge margin, and were these exit polls actually polls having some connection with the crash that happened on the stock market on crash that happened on in the stock market on 4th June 2024. This is what were his questions that we have seen in the news. So these were the questions raised by Rahul Gandhi in the news in the latest time period. And also there is one more person who has raised the same questions. There is a former Secretary to Government of India, Ministers of Power and Finance. That is Mr. Sarma, who is actually filed also and has also written a letter to Economic Affairs Secretary for the purpose of this particular probe on the stock market crash that happened on 4th of June. The exit polls, which predicted that BJP would win with a huge seat share, started coming up from 1st, 2nd of June. And because of this, on 3rd of June, the stock market went up zoom. Like it was like a huge upward swing in the stock market. And later on, what happened on the 4th, as the actual numbers started coming relating to the polls, the results of the polls, they were not matching with the exit polls that predicted a huge win by the BJP. So the stock market basically had so the investors had some kind of a panic created, and the on 4th of June, the stock market again crashed. And the word crash was to the extent that the Sensex lost 6,000 points, the Nifty lost 2,000 points, and the investors' wealth was eroded by around 30 lakh crores. So it was a huge amount that the investors' wealth was eroded. Also, in such a climate in the stock market, it is often seen that the retail investors who had invested their money would lose out on their hard-earned investment, and there would be some kind of speculative traders who would be the winners and who would profit a lot. So this is what is generally expected from such type of upward and downward swings which happen in the stock market. So now what are we going to discuss in today's video is these points, that what is basically a stock market scam, what is a stock market manipulation, and what does SEBI have a take on this fake news and things which are influencing the market. So we are going to understand those things. Once you reach the end of the video, then you will be able to answer whether the comments raised by power personalities in the government, or any, for that matter, anybody in that case, are they allowed to actually put up investment advice, and is it falling within the criteria of SEBI guidelines? So that is the answer that you would be able to get yourself by the end of this video. So watch this video till the end and let's understand this particular part. As soon as we say stock market scam, everybody who has a little bit study about the stock market will have his the name in the mind is the Harshad Mehta scam. So that happened in the year 1992. So what happened there was fake checks, corrupt officials, market loopholes, and a lot of fabrication was done in the stock prices. So all this led to a huge issue in the stock exchange. That was a huge fall in, and investors that time also lost a lot of money on the stock exchange. Now, what happened because of that scam? The positive side was that there was a formation of an online security system by the Securities and Exchange Board of India, that is SEBI. And then there was a code which was formulated, which was a code of desirable conduct by the in terms of corporate governance. So that was a positive thing of this scam. But of course, because of this scam, a lot of investors had already washed out their wealth and they had lost a lot of money. Now, what are the features when a scam takes place? Okay, it could be a small scam, it could be a huge scam. We are not going to that point. What we need to understand is, will that particular instance or will that particular case be connected to what we can call as a scam or a fraud? What will be pointed out as a scam is that there is a promise of high returns. Okay, it's high returns, but which will probably not be achievable. So it's not a guarantee that you will get those returns. But yes, they promise it in such a way that you feel that yes, we may get those returns, and you feel really happy about investing because you will be getting a lot of returns. Then who tells you to invest is basically going to be a person who is influential. He could be your financial advisor, that person could be a stockbroker, the person could be a power personality, the person could be anybody who has influence on people. So if they comment by saying, okay, you invest and you will get a promise of high returns, based on their understanding, a person may go and buy the shares, stocks, bonds, debentures, whatever the case is. So shareholders would be, or any investors would be pursued to actually go and invest and buy those shares, even though they may be running at a very high price. So this is kind of a temptation which is created by the people who are in that position to influence the person, be that person a single person, be it a group of people, or be it the entire common population of investors. Now, what happens even in, so when you're talking of a stock market scam and stock market manipulation, now manipulation is also a similar thing, but may not be the same thing. But in manipulation also, what happens is the entities are using their knowledge. That means there could be a person who is connected with the finances and everything, and they have a deep knowledge about the stock exchange, the securities, the company, and everything. And they use this particular knowledge to fool or deceive the uninformed investor. So sometimes they may also use tactics which can artificially bring the stock price up or down. This could be created by actually putting up fake orders on the stock exchange, buy orders, sell orders, and at the end, when the point comes to actually buy or sell, they withdraw the order. And in this condition, what happens? The price fluctuates. So if we see here, if the event is positive, okay, if that particular event is positive, and if you're showing that, okay, it's a good time that is going to come, that time the investors may be actually influenced to feel that, okay, I can buy the stock. Maybe the stock is already trending at a high price, and yet investors will buy it because they feel that the stock price will be going on further upward trend. And if that particular news or that event that is picturized, that is actually showcased, that is actually put forth by the people who want you to invest, if they put it forth as a negative event, that means something is going to go wrong, big issues are going to come up, and there is news about all that, then the people may be tempted to actually sell. So even a small bad news about a company, you see the stock prices falling. Maybe later on that person comes out clean, the company comes out clean, and there is nothing to worry about, but yet the stocks have already done their wonders by going up and down. So this is a kind of manipulation that can be used by the people who are actually the entities having the knowledge about that particular system, knowledge about the psychology of investors, and knowledge about how they can actually put forth numbers, figures, events in such a way that investors are tempted to buy or sell. Now, why this scam and manipulation is done is because of huge investors who have already put some money in the stock market, and they want their money to grow, and or they want to buy in the stock exchange, so they want the stock price to fall. So if the bigger investor wants to buy from the stock exchange, they may use manipulation and scams for the purpose of bringing down the price. And if the investor is already a person who has put in money into the stock market and wants to withdraw it at a higher price, he may put up market manipulations that are positive, and people start creating more demand in the market, thereby leading to a price increase. And with this price increase, what happens? Automatically, the price will be beneficial for the person who wants to withdraw the money. So the bigger investors can withdraw the money at a higher price and rejoice and get the benefits of that price rise. But all this is done at the cost of many retail investors, small people like who buy maybe very few number of shares in that company, and they are putting their hard-earned money into the stock exchange. So these people are the ones who suffer because of scams and manipulations. Now, what does SEBI have to say about this? SEBI has already put a lot of efforts in the scams and the manipulations right from 1992. SEBI is already doing investigations. SEBI is forming different committees, boards, and bodies for the purpose of benefit of small and large investors. So they want to keep the investors secure and that this particular, whatever the buy and sell is taking place in the stock market, should have transparency. So this is a good thing that SEBI is trying to achieve over these years. And the Securities and Exchange Board of India has already formed an industry standard forum, as you can see here, industry standard forum, which is actually connected with the market rumors. So they have formulated this board specifically to keep a watch on market rumors. Now, this industry standard forum ISF was supposed to come in force from 1st of June 2023, but it got delayed, and somehow that was to come in on 1st June 2024. This was supposed to be formed on 1st June 2024, again that is delayed, and from 1st of December 2024 it will be full-fledged. So still on 1st June 2024 this forum is not completed, and it will actually start working full-fledged from 1st December 2024. In this, it's a very important thing that you need to note that SEBI says, this Securities and Exchange Board of India says that any kind of mainstream media rumor, so if the media is mainstream, it's not just like Facebook share which you do in your friends circle. So that's not something which can come in SEBI scanner. So if there are few people who are just sharing that, okay, this company will have better raise of share price and this company will have a fall, and that is just a small discussion which is not affecting many people, then it will not come under SEBI scanner. But what if a news channel which crores of people are watching and where investors look for advice on stocks and shares advises you in such a way that it falls in the category of rumor, it becomes a market rumor, then SEBI will investigate. So what is SEBI going to investigate under this? Basically, it has been investigating and it's doing a tremendously beneficial job for investors in terms of investigations like those which hamper the interest of small and big investors in the stock market. It also looks for the movements in stock market that look suspicious. There is also regulatory controls on different, you can say, transactions connected to shareholding, ownership rights, and everything that are formulated by the Securities and Exchange Board of India. Market volatility is also investigated by SEBI. Various kind of people who are involved in the companies, there could be top management, it could be shareholders, it could be other holding companies. All these are also monitored and come in the scanner of SEBI. And anything which connects the market with foreign investors is also a part of the SEBI investigation, if at all there are transactions which look suspicious, and it will continuously be monitored and scanned by the SEBI to find out whether there are any suspicious things that are happening. By now, you have understood that what is the stock exchange influenced by? Is it influenced by market rumors, you can say any kind of comments made by, is it influenced by any kind of comments made by power personalities and so on? So now, after watching this entire video and seeing that what exactly SEBI needs to investigate and what exactly SEBI does investigate, you are going to answer these questions. So after watching this entire video and after going through what is SEBI investigations, what is market manipulation, what are scams that can happen in the market, what do you think about the comment that Rahul Gandhi has made recently that there should be a JPC probe in the stock market crash that happened on 4th of June 2024. So these questions should be what he has raised can be answered by you with the help of this video now. Should a PM or an HM, should a Prime Minister or Home Minister actually comment on where you should invest or not? In this entire process that happened in this first week of June 2024, who would have been the beneficiaries? That's another question that remains unanswered. Who would have been the top stock market sharks who have withdrawn their money and benefited from the 3rd June upward swing that happened in the market? And what was the chunk of retail investors' money that was lost in this entire process? Even if some people may say the market has again gone up, but remember that even if the market goes up, it doesn't mean that all the retail investors who had lost their money have now recovered back the amount. Be a possibility that when the stock market starts going down with panic, these retail investors start selling off in that downward trend, and thereby they lose out the money. With all this movement in the stock market on 3rd and 4th June and whatever the allegations that have been put up by Rahul Gandhi, we have got an interesting case study scenario for learning and studying, which connects us to the Securities and Exchange Board of India, to various market scams and manipulation tactics that can be used by the manipulators, and whether or not SEBI would investigate such a case. So let's see what happens ahead in this news relating to the 4th June market crash of 2024. So hope you had some learning relating to Securities and Exchange Board of India through this video. And if you like this, do share it with your friends and other people also who would like to understand certain things about this situation and scenario that is going on in relation to the case about 4th June market crash 2024. So hope to see you in the next video of Commerce GYAN. Thank you.